Warren Buffett, who's like a money expert, gives us some really great advice to be better with our money. His lessons aren't just about making money, they're about being clever with it. And you know what's really cool? He began investing when he was young. Can you figure out what made his strategies work so well over time? In today's video, we're exploring how to make money grow. Warren Buffett, the money expert, really understands this stuff. He's like a financial superstar. By investing wisely, he's accumulated a massive amount of wealth, making him one of the richest individuals ever. Curious about how his strategies could boost your money skills? Let's jump in and discover how he makes it happen. But before we continue, we would like you guys to subscribe to the channel, like this video, and hit the notification bell icon so you do not miss out on any amazing and entertaining content. Risk comes from not knowing what you are doing. Buffett recommends staying away from investments that confuse you. He only got into tech stocks after gaining a better understanding, a choice that reflected in Berkshire Hathaway's success compared to NASDAQ. It's akin to saying, wait a moment, let me figure this out before jumping in. Buffett's approach suggests that plunging into something you don't comprehend can be risky, similar to leaping into a pool without knowing its depth. His triumph demonstrates that taking time to comprehend where you're investing your money is worthwhile. Just like learning to swim before diving into the pool ensures you won't get in over your head. It's a wise strategy that pays off in the long run, highlighting the importance of knowledge and caution in the realm of investing. Have an owner's mindset. Buffett believes that buying stocks is akin to owning parts of a business. He suggests doing your homework before investing, just as you would before buying a real business. His company, Berkshire Hathaway, demonstrates this by making long-term investments in major companies like Coca-Cola and American Express. It's comparable to saying, before getting a pet, learn how to take care of it. Buffett's philosophy revolves around thorough understanding before investing, similar to knowing everything about a business before acquiring it. Berkshire Hathaway's successful investments in these major companies indicate that research and patience pay off, like nurturing a robust plant with care and time. System overpowers the smart. Buffett advises regular people to opt for inexpensive index funds instead of selecting individual stocks. It's similar to suggesting, choose the full buffet instead of picking one dish. This approach helps in smart investing without allowing emotions to cloud judgment. By opting for index funds, you're adhering to a plan, much like following a shopping list. It's a method to maintain control and prevent emotions from influencing your investments. Although this advice may seem unexpected, it's akin to having a knowledgeable friend saying, stick to this and you'll succeed. Buffett's recommendation underscores the importance of a consistent and disciplined investment strategy for regular individuals, shielding them from the volatile fluctuations of the market. Be fearful when others are greedy and be greedy when others are fearful. Buffett takes advantage of market ups and downs by investing when things seem uncertain and businesses are undervalued due to fear. His plan is similar to going shopping when there's a big sale, grabbing quality items at lower prices. Back in the 2008 economic downturn, he applied this strategy and made substantial profits. It's a bit like saying, when others are worried, that's when you look for the best deals. Buffett's approach is about being brave when others are fearful, somewhat like identifying opportunities in tough times. His success in challenging periods highlights the wisdom of staying calm and seizing opportunities when others might be hesitant, making intelligent moves when everyone else might be panicking. Never invest just because a company is cheap. Buffett used to be all about buying stocks when they were inexpensive, but now, he's more interested in finding strong companies even if they aren't the cheapest. It's like saying, it's not just about how much it costs, it's about how good it is. Buffett's change shows that quality matters more than just getting a good deal. It's a bit like choosing a durable toy that might cost a little more but won't break easily, rather than a cheaper toy that might not last long. His focus on strong and valuable businesses shows that it's not only about the price you pay, it's about what you get in return for that price. Buffett's new way of thinking teaches us that it's smarter to pay a fair price for something really good than to just go for something cheap that might not be as great in the long run. Save for a golden rainy day. Buffett is well known for being extremely cautious with his money. He recommends setting aside some money during good times, so if the market isn't doing well, you have cash to invest. Think of it as storing nuts during the plentiful times to ensure you have food when it's scarce. Buffett has followed this approach himself. When the market faced challenges, he had money ready to invest, resulting in significant returns. Essentially, it's like saying, save money when you can, so you're prepared when things become difficult. Buffett's idea revolves around being wise with your money, like creating a strategy for challenging times and using that plan to get ahead when others might be facing difficulties. His success demonstrates that being cautious and having money prepared when others might not can lead to substantial victories in the long run. Never use borrowed money to buy stocks. Buffett strongly advises against borrowing money to invest, emphasizing that it's very risky. Think of it as a warning not to play with fire, as you might get burned. His concern is that if you borrow money to invest and the market suddenly drops, you could find yourself in a lot of trouble. It's similar to building a house on shaky ground. If the ground shakes, the house might fall down. Buffett's guidance revolves around being cautious and avoiding significant risks that could lead to financial harm. He wants people to be safe and not expose themselves to challenging situations, especially if things go wrong in the unpredictable world of investing. His care for people is evident, as he aims to protect them from potential financial disasters. Keep it simple. Warren Buffett believes in keeping investing simple. He stresses the importance of investors truly understanding where they're putting their money. He strongly advises against diving into complex things like cryptocurrencies or risky investments. For Buffett, it's not only about making a quick profit, it's about constructing a stable and enduring financial future. Embracing his guidance can transform your approach to investing, guiding you towards sustained financial success. His strategy isn't just about the present. It's about making decisions that will benefit you in the long run, akin to planting seeds for a garden that consistently yields fruits for years. Warren Buffett's counsel teaches us that, at times, sticking to straightforward and secure investments can lead to more dependable and consistent success in the future. Time is the friend of the wonderful business. Buffett strongly believes in the power of compounding and the positive outcomes that arise from sticking with investments for an extended period. It's comparable to planting a seed and allowing it to grow into a towering tree. It requires time, but the results are remarkable. He recognizes that time is a significant factor in maximizing the benefits of your investments. His approach revolves around letting your money steadily grow over time, much like witnessing a small snowball transform into a substantial snowman. His advice imparts the wisdom that remaining invested for an extended period can have a substantial impact on the eventual outcome, just as giving something time allows it to grow larger and better. That's it for today. If you enjoyed this video, make sure to hit that subscribe button and don't forget to give this video a thumbs up. Let us know your opinions in the comments below. Thanks for watching, and we'll see you in the next video.